What's going on with Bitcoin and with crypto in general? The Bitcoin price dipped below 100K again. What does it mean? Well, when you look at the price development over the past decade or so, clearly you can see the law of diminishing returns is at play. I'll explain it to you. In 2012, Bitcoin rose from its low to its high from $14 to about $1,400 or so. That's 100x, 100 times as much. But the next round, 2016, Bitcoin only had a 50x price increase. That's half of what it did before in terms of volume. In 2020, Bitcoin only rose 15x, right? And so I suspect, it's divided by 2, divided by 3, divided by 4. Let's take 16 divided by 4, we get to 4x. So this round, I would expect Bitcoin to do 4x. Very little compared to the past. And that's because of the volume. In 2012, you only needed a couple of $1 million to flow into Bitcoin to have 100x. Now you need gazillion billions to flow into Bitcoin just to have 2x, right? So 4x from a low of, say, around 30K, we would expect Bitcoin this round not to exceed around 120x. In fact, we may have already reached the peak just over 100K. But something much more interesting is why the price rises. Look, I've been in Bitcoin since 2013, so I know what I'm talking about. I understand the halving process. Every 4 years, Bitcoin mechanically halves its output, right? And it increases the hash rate for the miners, making it more difficult, more costly to mine them. Therefore, prices should go up if demand goes up, right? And every time the halving happens, then a year or 1.5 years later, we have the crunch where there's more demand than supply, right? And the price goes up. But it happens to be so that the price rise in Bitcoin coincides with the US elections. And that's very suspicious. It means that the demand is not mechanical, of course. The demand is driven by the social experience of having new US elections. These are the most important democratic elections in the world. The whole world is watching. And regardless of who wins the election, Democrat or Republican, there's going to be a ton of people out there in the US and outside of the US who care about it enough to start fantasizing, hey, with this candidate, maybe now we will have the utopian future we've always dreamed about. Maybe it was people. So when Biden won, people were like, now finally we're going to get what we want, right? And then Trump wins again, and it's, finally now we're going to get what we want, right? Different people, of course, right? And so psychologically, people imagine that now things in the world are going to change for the better. And that means they feel they can invest in the future. Get it? They feel like things are going well for me. Now I can invest my excess cash into the future. I believe that the Bitcoin phenomenon in itself is an expression of this fact that we are living in the age of money. We have a lot of money, but we already have a car, we don't need another car, but it's not enough to buy another house or to even buy a house at all. So you have some excess cash and you're thinking to yourself, why don't I invest it in something that seems to be going well? And so they invest in crypto because it was largely an unregulated or deregulated market for a very long time, and still is. In many ways, crypto is very unregulated compared to average ordinary stocks, right? So people feel that, hey, this Bitcoin thing is going 100x, 50x, let's invest in the Bitcoin. Even if it's doing just 10x, we'll still invest in the Bitcoin because it's way more than what an Apple stock or a Google stock or a Facebook stock would give you, right? And most people in the West wouldn't even think of investing in China and so on, right? Okay. Price goes up after the US elections. Around November, December, you see the price shoot up in that year. But then comes the new year. There's the inauguration effect. Maybe during just after the inauguration, January, February, you can see another price bump. Maybe Bitcoin will return to 120K or so, 130K or so next year, right? But then comes March, April, and people already start to get frustrated. The progress they wanted isn't coming quickly enough. The price isn't rising fast enough anymore, right? The utopian dream we had, Trump is going to fix all our problems. And by March, just 2 or 3 months into his presidency after the inauguration, people are already disappointed that everything they wanted is not going to happen. It's just more of the same. And, at some point, people have to realize that the U.S. president is not really in charge of the U.S. foreign policy, obviously. It's the Pentagon. It's the Council on Foreign Relations. George Soros' Open Society foundations that are way more influential, way more powerful behind the scenes than the president is in the White House, right? So people get disappointed, and what do? If the future they want is not arriving quickly enough, they start selling, cashing out, goodbye. And that's why I will predict that by February, March, or April, no later than April, Bitcoin is going to crash again. But when Bitcoin crashes, it always crashes by 60 to 80%. So counting from 100K, you're going to see Bitcoin prices below 20K again. People are going to lose a fuck ton of money. Okay, but why then? Well, Bitcoin, of course, was an expression of this fact that we are living in the money age. But that's a very temporary thing, right? This age of money is coming to an end. And it may very well come to an end when Bitcoin ultimately dies. Due to that law of diminishing returns, maybe we get 4x this cycle, barely 1.5x next cycle after that. After 2028, the whole crypto market comes to an end and will never return. It was a one-time phenomenon, just like the Dutch tulip markets, the tulip bulb markets, the tulip bulb craze, right? It happened not because people cared about tulips or because people care about Bitcoin. It happened because people had too much money lying around that they couldn't invest otherwise. All right. So we live in an age of fake money.